Module 2, Income. You are required to track your income, no one else, when you're self-employed. This is an IRS requirement. You may have been used to W-2 land, where you worked for an employer and they took out the taxes for you and they reported your income nice and neat for you at the end of the year on a W-2, and your taxes were easy. Now you've got the business. We're going to figure this out. Don't worry. Going to track that income. Let's look at some examples of invoices for a service business or for a product business. So we have here Jamie Kelly. She's doing business as Prime Designs, and this is her invoice for how she bills out for her widgets. She's done this in an accounting software program, also not necessary. You could also do this on a piece of paper at a sales, say you're doing this at a sales fair or at a trade show. But here is an example of what should be on an invoice. The date you sold the product. Who did you sell it to? Oh, Jamie Kelly here sold it to Clear Pennies. What did they sell? A quantity of 12 widgets. 12 widgets were sold at $20 each. $240 Jamie made. Awesome! And that is your product invoice. You can pull up the download sales invoice. Once again, Jamie Kelly of Prime Designs. They are a web designer. And so there's not a product being sold, but service hours. That's how you track your time, right? Product is you're selling something that you've made or resold, and a service is you're charging for your time. So here, 12 hours were done to do web design services at $75 per hour. Pretty good, $900. Once again, we have the date and who it was billed to and how much you made. $900. Score. Really good. Some people may pay you as a subcontractor, and they're going to ask you to fill out a W-9. Whoa, back up. What is a subcontractor and what's a W-9? A subcontractor is someone who works for someone else doing services. So we'll go back to talking about our web design person, Jamie Kelly. So you're given this W-9. Guess what though? It's really no different than the W-4 you've had to fill out when you've worked for a job. All they're really asking for is your name, your address, and either your social security number or your federal ID number. And here's why you would want a federal ID number. Let's go up to the top of the form, box 1, where we just put our name, Jamie Kelly. And then if you have a different business name, then you put it there. That's that DBA thing we were talking about. So Prime Designs. This person is just an individual sole proprietor, so we just check that box. And then it's just your address. You got this. No need to have any form fear. There's our address. We know how to do that. Ooh, now they're talking about employer identification numbers and social security numbers. Well, the employer identification number you got from IRS, or you put down your social. You would want to put down your federal ID number if you have one. That way no one can have your social and commit any fraud against you. That's it. That's the whole W-9 form. And now they can pay you as a subcontractor. And what this also means is they're not going to be taking taxes out for you. So you're considered self-employed. Now go to your download, 1099 Miscellaneous. This is the form that you're going to get after you've filled out the W-9 and they pay you as a subcontractor. Looking at page 4, the 1099 Miscellaneous. At the top of the 1099 Miscellaneous, the information you see in the payer's name, that's the person who paid you. That will be all their info. And remember, Clear Pennies was billed that $900. Then payer's TIN. Why are they calling it TIN now? We were just calling it an employer identification number. Why is it now being called a TIN? Taxpayer identification number. So many names for the same thing. It's just the federal ID number that you got. The payers, that's their federal ID number. You don't have to worry about their TIN or federal ID number, but I would verify when you get this 1099, is the recipient's TIN, is that your number? Did they do that correctly? So it's tagged to your name. Then go down to recipient's name. There's your name. Jamie Kelly, doing business as Prime Designs. The address, all easy. And look, over in box 7 is the $900 that was earned for doing the web design. All of those other boxes are not for subcontractors, and you don't have to worry about any of those boxes. As a subcontractor, the income should strictly be in box 7, non-employee compensation. What does that mean? You're not an employee. You're a self-employed individual, and this is now your self-employed income. Now, if you're selling a product, you may receive a form 1099K. So go to your download 1099K and to page 3. You don't have to worry a single solitary thing about filling this form out. This is going to be filled out for you if you're selling a product and you're collecting payments through a credit card company. There's companies like Square and other credit card companies who process these things for you. But what's going to happen is they're going to send you a 1099 for it. You're going to say, what in the world is this thing? And now you're going to have some familiarity as to what it is. 1099K. Let's take a look at this form. Shows the filer's name, and that's the credit card company that you've been clearing through. Payee's name. Aha, that is you. Jamie Kelly's name is there, as you can see, selling widgets and received all of these credit card payments. The address, just verify that everything is right, the federal ID number looks right, and that the amounts look right that you think you collected, because they can make mistakes too. So you'll look at that payee's identification number and make sure that the amounts look right for what you collected for your product. And then you can just file it away. There's nothing exciting you have to do with this or react or send in, because you're going to be tracking your income your own way. This is just kind of an extra verification for it. The government requires these things to be filled out to be sure that people are claiming their income. That's why, once again, it's important to claim your income, because they have a lot of tracks to find you if you're not wanting to report your income. Even if you don't get the 1099s, you're still going to report your income. Yes, those forms are required by the government, but remember, you're the only one who is responsible for tracking your income. So if you made less than $600 with somebody, you won't get a 1099, but you're still going to claim your income. Like Guardians of the Galaxy, do the right thing. Claim your income. Your business will grow. I've noticed that businesses that do everything right, they grow bigger, they get employees, and they succeed. And you're going to feel better about it too. Well, what about if you're in a business that you feel like you just take donations for? You're just getting going and you're just asking for donations to keep your business going. That's still income. Have you ever seen that someplace where maybe someone's doing some energy healing or massage and they say donation only, and you kind of come up with the price, but they have a suggested amount? Or maybe you're thinking you could do it more on a donation base, because that doesn't really sound like income you have to claim. That's just a donation for your time. It is still income. You want to be claiming that. Just calling it a donation doesn't mean that you don't claim it as actual income. So there's Patreon accounts, right? And there's these GoFundMe accounts. Now, if you're going and someone in your family has gotten in an accident and you start a GoFundMe and you ask for money for medical bills and for their care while they can't work because they've been injured, that's not income. But if you have a bona fide real business and you start a GoFundMe or a Patreon account and you're asking for your supporters, who are actually your customers, you're maybe giving them an album or you're giving them some free advice and you're saying, I'd just like a donation for this, that's actual income that you're needing to claim. So if you don't think that's an official business, that is an official business with official business income. And that's tracked, and that's on the internet, and that's out there to be seen. So you'll want to be claiming that as income. How do I track all of this income? Got income coming in on 1099s and Patreon and GoFundMe and from credit cards. All of that external stuff is great to verify against, but you're just going to have your own system. You're going to use an app, or you're going to use Excel, or you're going to use paper pencil method, even the notebook, or you're going to use some kind of accounting software. Remember what the goal is. You're just trying to tally your income for the year. So what will get you to that point? Will the app get you to that point? What do you jive with? What do you enjoy working with the most? If you're not a computer person, you're going to do the paper pencil. If you're techie, you're going to like to do some kind of app. And it's going to keep a tally of all of that income for you so that you have it at the end of the year when you do your taxes. That's how you track your income. Goal. You want to have the total of the income for the year. What will get you to that place? You saw the service invoice and the product invoice. That's sort of the internal, but what's going to tally all those so you have that total at the end of the year? Find that system that works for you. No dictating. Do what works for you. Maybe you're the kind of person who's worried about the detail and wants to keep every little thing that you have. So if a client writes you a check, you feel like you need to make copies of it and keep it. You don't actually need to keep the copy of the client's check that they paid you with, because you have the track of how much you made and your invoice in your program in Excel or in your notebook, paper pencil. So you don't need to keep the copy of their check. But people who get a little bit nervous about this stuff tend to like to keep extra documentation. There's something called the cost-benefit rule. Is there a benefit to keeping all of that detail? If there isn't, then you're costing yourself a lot of time. So you count the cost of your time versus the benefit of having something you're never going to refer back to. Don't worry about keeping that and over-recording, because you're just going to stress yourself out. You're better off working on your business and keeping this admin stuff as simple as possible. Just staying compliant. That's all you need to do. You don't need to over-track it. Let's say you've gotten a loan. Now the loan goes into your business bank account. So money into the business bank account seems like it must be income. But loans are not income. Let's say that together. Loans are not income. See, you're learning stuff today. You don't have to pay tax on a loan. It's just the loan comes in and then the loan gets paid back out. So it's a wash. There's no income that you have to claim on a loan. That would be so unfair, wouldn't it? If you got a $50,000 startup loan and your first year in business, you really weren't making much money and you had to pay taxes on $50,000, so unfair. The government's not going to do that to you. So you don't have to worry about paying taxes on that. And then consequently, on the flip side, loan payments come out, right? So wouldn't they be an expense? No, they're not an expense. They're not income. They're just a wash. So don't go tracking them on your sheet as loan income and then loan expense. They're a wash and they don't go there. So you don't have to worry about tracking them as income or expenses for the loan. What part of the loan, though, is an expense? The interest. The interest is an expense. And we'll talk about those in the business expenses module. We're going to get techie here, and we're going to talk about cash basis versus accrual basis. Woo, exciting. Accounting terms. So cash basis is you only pay tax on what you actually receive when you receive it. So what will happen is you'll invoice your client or your customer, and you'll invoice them in December. And what will happen? They'll drag their feet and they may not pay you till February. It stinks. It happens in business. So if you're not paid until February, but you billed that in December and you have to pay taxes in that year that encompass December, would that be fair to pay tax on money that person didn't even pay you yet until end of February? No, that's cash basis accounting. So if you billed them in December and they paid you in December, or they paid you by credit card and you got that money in December, awesome. Pick it up on your taxes and pay tax on it then. But if you've got the client who dragged their feet or that customer who dragged their feet and they don't pay you till February, you're not going to pay tax on that income or worry about recording it until the next year. And what's helpful is you have your business bank account that shows when those deposits were made. So we're not going to pay tax on money we didn't get yet. Because what happens is some people don't ever pay you at all, and that really stinks. So you learned about cash basis. Now we'll talk about the accrual part. If you are on the accrual basis, you pay tax on it when you've earned it. So if you bill it in December, you have to pay tax on it December, even if the person didn't pay you into February. Now, what would you rather be on? Probably the cash basis. Guess what? You're allowed to be on the cash basis for the government purposes up until you earn $25 million in sales. Hey, maybe you'll get there. You never know. But you're allowed to pay tax on the cash basis until 25 mil. Sweet. You don't have to pay tax on things people drag their feet on. Awesome. What if somebody doesn't pay you? Can you deduct that amount as bad debt expense? I've heard about bad debt expense, but no, you can't deduct bad debt expense. Why? The cash basis means you only pay tax on what you receive. So since you've never received it, it's already pre-deducted. If you were on the accrual basis and you had to pay tax on the income in December for that customer who dragged their feet and then never paid you, then you can deduct it back off because you've paid tax on income you never got. That's how bad debt expense works. Let's talk about some tricky situations that you can really learn from. So you have this client and they pay for you to go to LA to work on a film. Super cool, right? How fun would that be? But when that happens, they reimburse you for that travel on your invoice. So you've invoiced them for your time. You're billing them, let's say $800 an hour, go you. And then you also get reimbursed for the airfare and the motels and the yummy food that you ate while you were in LA. So when they pay you one lump amount to reimburse the whole thing, and that's income. But whoa, I don't want to pay taxes on all those expenses because those are expenses. I don't want to pay tax on money that I've paid back out and call it income, but you can. Here's what you're going to do. You're going to pay taxes and report all of that money that they gave you, including the reimbursements. But then you're going to deduct it back off as an expense under travel and meals. So it'll end up being a wash. But to keep it simpler so you don't start netting it against expenses, you're going to claim it all as income, and then you're going to take off the expenses that they paid you for and keep your receipts. Don't give them your receipts or make copies of them so that you have them, because you're going to be deducting that travel and then those meals and then the hotels back off. You will not pay tax on the income from the reimbursements, but you are going to put it in an income account. Confusing, I know, but it will wash back off. You'll see. Another tricky scenario is credit card fees. They come off the top a lot of times of the amounts they pay you. So say you earned $100 in sales and the credit card takes 3%. So they're going to take $3 off and only deposit $97. That doesn't seem fair, but it's business. That's what happens. But what do you report as income then? You only got 97, but 100 was your real income. So you can track it one of two ways. You could track it just as the net amount and then not worry about the credit card expense down in the expenses. So you'll only be claiming the 97 as income because that's all you got. And then the other way you can track it is count the whole $100 as income and then deduct off the $3 under expenses as credit card expense. It's a little pain in the neck thing, but you have the option of either way to do it. What about pesky sales tax? Some states charge sales tax on your product or your service, yet that all gets deposited to your account and looks like income, but you have to pay it back out. You're a custodian of those funds. You need to pay those back out. How will you track it as income if it's also an expense? It's going to work similarly to the credit card fees. You can include the total amount that you earned with the sales tax as your sales, and then down in expenses, sales tax. Or you can just include your income at its net amount minus the sales tax because you've already paid it back out to the sales tax people. So you can do just the sales minus the sales tax because those are your true and proper sales. The sales tax is a wash. You've taken it in, you've paid it back out. So don't claim that as income. People are often asked for their gross income. And then there's something called net income. When you're asked for your gross income on a loan application, they are usually thinking about people who work at regular jobs and have W-2s and have real gross income. As a self-employed person, your gross income is your net income. That's the amount that you've really truly earned. Let's use an example for what is gross income and what is net income. So when you look at the slide here, gross income, $1,000, and then you have $500 in expenses, that comes down to a $500 net. The net profit is what you actually pay taxes on. But here's the thing, you're going to get other organizations that are going to ask you what your gross income is. Now those people, they're used to gross income being a paycheck, and so they don't really understand self-employment. So for their purposes, you're going to be reporting your net income as your gross. I know that sounds super confusing, but here's why. With them being used to paycheck land and a W-2, they're always asking for your gross income. What they mean is the income that's available to you to use. Now, your net income is the only amount that's available for you to use because you've had to pay expenses, right? So you don't get to keep your $1,000. You've paid $500 out in expenses. So there's only $500 net. So that's actually considered your gross. And here's the type of organizations you might come up against that are going to want that income from your business. And they're going to call it gross. Loans, if you go for a car loan or if you go for a house loan, they're going to say, what is your income from your business? It's not your gross income. Financial aid for your kids or for yourself, you're going to want to report the net because you're not going to get any financial aid if you report the gross. You need to take the expenses off first, right? And then for health insurance, you'll end up paying too much for health insurance if your income is too high. So you have to consider that you only should give them the net on that, which is your gross. I know, sounds crazy, sounds confusing. Other organizations might also ask you that, but just remember, they don't understand self-employment. They only understand employees and paychecks. So this is a world that you have to navigate on your own, but this should give you the information that you need to understand what they're really asking for. The last thing I want to leave you with in the income module is make sure you're charging enough. One of the worst things I see sometimes are self-employed people working so hard and spending all of this time and energy on admin and billing their clients and keeping track of their accounting, and they're not charging enough. Yes, maybe when you worked for somebody as a W-2, you were getting paid $25 an hour, but working for yourself, it should be up to like $75 an hour because there's a lot of time that you work that you're not being paid for, including doing this course. You're just learning. You're billing people. You're tracking your income and expenses. You're bidding jobs. You're researching things. You're doing marketing. You're not getting paid for any of that. You want to make sure that you're charging enough so it makes it worth it, especially if you want to leave a regular job and launch and make it on your own. Charge enough money. You're worth it. And how do you know you're charging enough? You're able to take money out of your business account and live on it. That's how you know. Look at others who are successful and emulate what they're doing so that you can succeed too.